I'm very much in a space right now where I'm not doing anything that's going to compromise my peace and happiness. So I think just taking control, making sure you like maintain your power, don't give your power away to anybody. That I feel like is the key to like truly being happy.
Hey, bro, you better get ready to buckle up, because this shit don't get no easier, bro. Once you think the grind gets easier, come on, bro, you silly, man. This grind's only for the strong ones, bro. And if you weak, I suggest you go ahead and leave. It's tough, but it's true. Be safe.
Know who I am. I know I'm important. Like, I know my worth. I ain't gotta walk around thinking I'm bigger than nobody. The only person I'm trying to be bigger than is the person I was yesterday.
What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have planned for y'all today. We're going to be building a new option algo strategy using SPY, and this is going to be a 0 DTE strategy. We're going to be using a grid strategy, right, and Bollinger Bands. All this is going to make sense soon. If you haven't already, I need you to go ahead and like and subscribe. My name is Creative. Here at Creative Coder, our aim is to create different algo trading strategies, right? AI agents, machine learning, anything when it comes to coding. Our aim is to be able to create it and show it to y'all. I've been doing this streaming, that is, for about the past 6 weeks now, and I've been coding. I'm still new in this since about April of this year. It is 2025, so give or take about 10, 11 months, right? Being able to craft and hone in on my coding skills. So I just wanted to bring my process to you all, and just to be able to let you see what I do. So today we're going to be using Cursor in order to jump right into this. So what I'm going to do is open up a new project. Not there. I wanted to open it up in Option Baby, and I'm going to call it Grid is Life. Oh, if I can spell. Beautiful. And if you do have any questions throughout this process, please let me know. We are going to be using Claude Code with inside Cursor in order to get this done. What I'm going to do is bring in a file that I created earlier in order to assist me to kick this off, right? So let me go ahead and copy the file. And I'm going to be using Python. That is my language of choice. When I first started my journey, I wanted to become a AI agent software engineer. So a lot of AI agents are built on Python. So that's why I learned Python. All right, so let's go ahead and jump into this thing. Again, today we're going to be building a grid algo. What I want to do first is understanding grid trading with Bollinger Bands. And again, if you haven't already, please make sure you follow, like, and subscribe. So what is an option? An option is a contract that gives us the right but not the obligation to buy or sell a stock at a specific price before a specific date. Now, what is that specific price? That specific price is going to be our strike price. What is that specific date? A specific date is going to be our expiration date. There are two types of options that we're going to be working with here. There is a call option. This is the right to buy. And then there is a put option. This is the right to sell. So easy memory trick that I kind of honed in and been using throughout my trading, right, as a call option is I want it to go up, or in other words is I'm bullish on the market, right? What do bulls have? Bulls have horns, and those horns tend to point up, right? So a call option is a right to be able to buy the underlying option contract because we're bullish on the market. We think that it's going to go up. A put option is I want it to go down, and it's the right to sell. So if I want it to go down, I'm bearish on the market, right? Because I'm thinking that the market is going to go down. So let's go ahead and continue. And I need you to follow along, right? Because there's going to be questions at the end that I'm going to need your help to answer here in the comments. So if you do have any questions while I'm going along, please let me know. If I'm going too fast, let me know. And if you can't hear me bearish on, let me know as well. But let's keep going. All right, so what is an algo, right? Everybody wants to create an algo. Everybody wants to have an algo trading bot. So let's break it down so we actually understand what is an algo. An algo is an algorithmic option strategy, or an algo is an automated decision making system for buying and selling options based on the rules we design. In plain English, right, is just turning your trading plan into a clear instructions that a computer can follow 24/7. Why would you like to use an algo, right? Because there's no emotions. We're taking the emotions out of investing, right? We're giving the computer a set of rules that we're going to design, and the rules that we're going to design is going to be a grid strategy using Bollinger Bands, right? So we're building out this algo even as we speak right now, right? Consistency, same strategy every single time. Speed, it reacts a shitload faster, right, than humans, and 24/7. It works while we sleep, but that's kind of, let's just keep going, right? That's kind of counterintuitive, right? It works while I'm up. It's not a cryptocurrency, right? These are options, right? So this trades during when the market is open, and it's 9:30 a.m. Till about 4 p.m. Not about, it is 4 p.m. So think of this like manual trading. We have to watch the charts, we have to decide, and then we click a button. For algo trading, we write the rules and the computer executes everything for us automatedly, right? So it's automating our strategy. So what is 0 DTE? These are the top of strategies that we're going to be building. 0 DTE means 0 days to expiration. So the reason I like to use zero, let me just keep going. So these are options that expire the same day. They're traded. Time to expiration is effectively 0. So there are many different type of options, right? There is weeklies, option contracts that expire every Friday. There are monthlies, option contracts that expire every 4th Friday. There are quarterly, semi-annual, right? So you get it. So the reason I like to use 0 DTE, why wait until Friday to get paid if I can get paid the same day, right? So that's why we like to use 0 DTE strategies, because yes, it has a lot more risk, but also has a lot more upside. So what this creates is extreme theta decay, and what theta is a Greek, and we're going to be going over this soon. So time value melts away, every minute counts, high gamma risk, price changes very fast as expiration nears. So this is a double-edged sword, right? It's cheap premiums, massive leverage, and quick profits. But on the other side of that, we can't go to zero fast, and there's no time to recover, because why? These are option contracts that are expired the same day that they are traded. So why traders love 0 DTE? Because SPY, which is the top 500 companies within the New York Stock Exchange, QQQ is the top 100 tech companies within the NASDAQ, and IWM is the top 2,000 small cap companies within the Russell 2000, have 0 DTE contracts that trade every single day. Small moves in stocks equal big moves in option prices. So there's no overnight risk. Position closes the same exact day. So what is a grid, right? So this gets to the meat and bones, right? Or this gets to the crux of what we're going to be designing here today. So a grid is just a grid is just lines on a chart. Every time the price touches the line, we do a small buy or a sell. So think of it this way. A grid strategy is a system where we draw price lines ahead of the time, and we make small trades every time the price moves between them, instead of guessing which way the market will go. So let's keep going. So step one, this is how we are going to draw the grid, right? So imagine the price is going up and down inside of a box. So this is our sell line if the price is going up. This is our buy line if the price is going down. This is our mean, right? This is our average. This is our center that we're going to be building this grid off of, right? So these lines are a grid within the strategy. So a visual for you. So step two is to watch the price bounce like a ball. So the price moves, the price moves like a bouncing ball. When it bounces up, we're going to sell. When it bounces down, we're going to buy. Every bounce is an opportunity, right? So when the price goes up, you sell. When we sell, what do? We're buying puts because we're bearish on the market. We think that it's going to go down, right? When the price goes down, we buy because we're bearish. I say that right? We're bearish on the market. It's going down. We're bullish when we buy because we think it's going to go up. So the key mindset is that we don't guess, we don't predict, we just react based on what the price is doing. So just like this ball here, if it bounces up, we're buying puts. If it bounces down, we're buying calls, right? So let's keep going. Oh, before I keep going, this is not financial advice. If you do seek financial advice, please make sure you talk to a certified financial planner. A financial advisor are those that are licensed in order to assist you. This is merely educational and entertainment. All right, let's keep going. So think of it like stairs. Imagine walking up and down the stairs. Here's the center. So we have 3 steps, right, or 3 levels within this grid to sell, and we have 3 levels within the grid in order to buy. So we have 3 opportunities to buy puts, 3 opportunities to buy calls here, right? And we're just waiting for that price to bounce either to step 1 or in either direction, right? And we have a way in order for us to work. So this is the pattern. As the price climbs, we sell a little by little, and as the price drops, we buy little by little. No big bets, just small, consistent trades. So now let's talk about the fence, right? So now let's talk about what's going to be containing inside that grid. So what we're going to be using is a Bollinger Band. Bollinger Band is a rubber band around the price. So the price is the ball, the bands are the rubber band. So what it tells you, when the price is stretched too far, it often snaps back. So that's why when it's too far up, we often bet. So here's just a little bit more further example to be able to really get it. So when it is bouncing to resistance, right, or when it's crashing up to resistance, it's making higher highs, we're going to bet that it's going to go back down to the average. We're going to call this line the average, right? And if it's going through support, we're going to bet that it's going to go back to the average, right? So a Bollinger Band is a rubber band around the price, and the bands are the rubber band. So what it tells us, if the price is stretched too far, it often snaps back. And if the bands are tight, right, there's a big move coming. So important, bands don't mean that price must reverse, right? They just mean that the price is far from normal. That's it. So remember, this is a stretch versus snap. If it's stretched too far, we're thinking that, okay, it might bounce back to the average. If it's snapped or if it's too tight, we're thinking that it might go back to the average, right? So if it's stretched, it's going to drop back down, what we're thinking, right? But again, Bollinger Bands doesn't mean that the price must reverse, but a good majority of the time it does, right? So that's why Bollinger Bands is consistently used when it comes to a grid strategy that we're building out here, right? So let's keep going. So a grid plus Bollinger Bands, here's the full system. So we're going to have the upper band and we're going to have the lower band. Let me show you an example of the Bollinger Bands, right? So let's actually go to the chart real quick. So what I'm looking at right now is SPY. This is the S&P 500. This is the top 500 companies within the New York Stock Exchange. And what you're looking at is on the 1-minute chart at TradingView, right? So TradingView is a free platform that allows you to be able to look at charts, and I love using them. If it's free, it's for me, especially the quality of charts you're going to get. So each one of these candles represents 1 minute of action between the buyers and the sellers. Every time you see a red candle, that is going to be a seller or a bear. Every time you see a green candle, that is going to be a buyer or a bull, right? So what you're looking at right here, this red line, this blue line, this green line, those are actually Bollinger Bands, right? So this red line right here is our overbought area. This is the area that is when it's too far stretched. Right now, it's too far stretched. The market is closed. It's 7:03 in the evening, right? PM for me, EST. I don't know when you're watching this video, but the market is currently closed right now. I wish we were looking at it live because we're looking at some crazy things happening in the market today when we're paper trading. So let's keep going. This red line is letting us know that this is too far stretch, right? Whenever we're seeing one of these candles touch the red line, let me show you an example of it. Boom. Y'all see it right here? So it's just dancing on that red line, right? So what we're seeing is that the price is way too far stretched. So what happened after the price being too far stretched, it just dropped down a little. So what we could have done is said, okay, you know what? We're just going to wait for a confirmation. And this is our confirmation that the sellers took back control because the buyers are in control here, but the sellers took back control. So maybe we enter a position here and just write it down for maybe 2 minutes and then close our position to be able to make a little bit of a profit, right? So going back to our code, what the Bollinger Band, oh, let me just keep explaining the Bollinger Band quick, my fault. So that's the stretch line, or that's the upper line, right? This middle line right here, let me just zoom out. Let me come back over here so you can really see it. This middle line right here, or this blue line, represents the moving average. Now, the moving average could be the SMA, which is the simple moving average. A little bit faster if you want, you can use the EMA, which is the exponential moving average. Shit, you can also use the WMA, which is the weighted moving average. You can use the triangular moving average, which is the TMA. Right, so this is just a moving average, right? And you can decide which moving average we're going to use. So I don't know if we're going to use the SMA or the EMA or the WMA. We'll figure it out as we're building out this strategy. And then this lower line here, right? This line lets us know this is the lower band, right? So whenever we have a price going through the lower band, right, we're going to expect that it's going to bounce back to the average, right? So we're seeing an example right here. SPY crashed through the lower band when it closed earlier today. I mean, today, December 16th, that is, this was a extremely, I'm going to say choppy day, but a little bit more bearish, if you would, right? Because as soon as the market opened, it gapped down. So what does that mean? The price probably started up here, right? And it just dropped right back down. I think a couple of, that make me 50 cents or so. I'll double check that. But nonetheless, in my opinion, humble opinion, this was a bit of a bearish day. So what we're seeing right now is it's not just going through, but it's like crashing through the lower band, right? So what we can do is maybe, all right, maybe this is a play for us to be able to say, okay, is it going to keep going down based off what we're seeing here for the past 1, 2, 3, 4 minutes, right? Because the sellers or the bears are clearly in control, right? Are the buyers going to step in the morning, right? So our strategy is saying that we're going to build a grid, and this grid is going to be maybe 2 price levels or 3 price levels, right? When we go 1 price level up, we have an opportunity to buy a put, and we have 3 opportunities to buys based on these price levels, right? And we have 3 opportunities to buy calls based on these price levels. So what our grid is saying is that we're going to use the Bollinger Band, the upper and lower band, as our stop, or as that fences. If the price crashes through either one of these bands, lets us know that a trend is forming. What is a trend? It is just a direction of the market where it's going. It could either be a bearish trend, which is the market is going down, or a bullish trend, which is the market is going up, right? So our fences act as safeguards. Whenever the market is crashing through one of these fences, we automatically stop, and we're no longer looking for positions anymore. So that's what it's saying here. So again, what is an algo? Remember we talked about this. Let's just go back real quick. An algo is an automated decision-making system for buying and selling options based on the rules we design. So little did you know, we are designing the rules right now as we speak, before we even get into like creating the strategy, right? So we're building it little by little as we go on here. So there's no arguing. We just wait for the price to come back inside its fence. Once it's back inside its fence, then the strategy continues. All right, so the complete picture, we stop when it's overbought, because this equals trend mode, right? Overbought is letting us know that a lot of people are trying to push the price up. And when you're pushing the price up, you're trying to push it to resistance levels. If you're trying to push it through resistance levels, we don't want that within a grid strategy. So we want to be able to get out. And the inverse, if you're trying to push it through support levels, we don't want that, because the trend mode is coming. We don't want that. So we don't want bullish trends. We don't want bearish trends. If you've been following us, so what a grid strategy is, for lack of better words, is a mean reversion strategy, right? So that's why you see this mean here. So yes, the price could go up. Yes, the price could go down, but it's always going to come back to its average, right? So saying this out loud, I draw charts on the line. When the price goes up, I sell a little or I buy puts. When the price go down, I buy a little or I buy calls. I only play inside the lines, and if the price leaves the box, I stop, and that is a grid, right? So we got it. If you do have any questions, please let me know. All right, let's keep going. All right, this is the part that I said I'm going to need your help in order to answer these questions, right? So I hope you've been following for those watching. So when we're talking about a call option, what does the call option give us the right to do? Is it A, is it sell a stock at a specific price? Is it B, is it buy a stock at a specific price? Or is it C, hold a stock forever? Shit, I wish. So which one do y'all think it is? Go ahead and type it in the comments. Is it A, B, or C? I'll wait a second. Little Jeopardy music. I'm playing. All right, it is going to be anybody? All right, so let me B. It is to buy a stock at a specific price. And what is that specific price? Our strike price, right? Beautiful. Why? Call equals right to buy. Memory trick, I want it to go up, so I want to buy. Why do I want to buy? Is because I am bullish on the market, right? So what does 0 DTE mean? Remember we talked about that. These are the only type of strategies that we build here. Why wait until Friday if I can get paid when, right? So remember I talked about that? So is it A, $0 to enter? Shit, I wish. If options work that way, if I just said, hey, I know this is going to be good, let me get in there. 0 days to expiration or 0 delta theta exposure. I wish. So I just eliminated it for you, right? So that's going to be anybody. All right, go ahead and type it in the comments if which one you think. Kind of gave you the answer. All right, we're going to hit B, 0 days to expiration. All right, in a grid strategy, what do you do when the price goes down to the line, right? If it goes down to the line, right, down to the line, do we sell, do we buy, or do we do nothing? If you're doing nothing, there's no point of you being here, right? There's no point of you watching, right? So there's one of these two things, right? If it's going up to the line, right, we're betting that it's going to go back down to the average, right? If we're betting that it's going to go back down to the average, that's the right to sell, right? So that's a put. So that's not what it is. If it goes down to the line, we're betting that it's going to go back up to the average. That's the right to buy, right? And that's going to be a call. So let's go ahead and put B. I'm noticing that these are all B, right? That's a little trick for you. All right, what should you do when the price goes outside the Bollinger Bands? Remember, the Bollinger Bands acts as our fence for this grid strategy. Trade more aggressively if you want to lose your ass. That's crazy. Is it B, keep trading normally? Interesting. Or is it C, stop trading and wait? So which one do y'all think it is? Is it A, B, or C? All right. It's just a little deviation. Just want to make sure you're paying attention. It is C. Why? Because outside the band equals trend mode. The strategy only works when it's inside the range. We're going to stop and wait. All right. So what is an algo? A type of cryptocurrency? Maybe. At this point, with all these names, there may be a little meme coin called Algo, and that would be funny. Or is it B, an automated rules that a computer follows? Or is it C, a special broker account? Interesting. All right. Any takers out there? Is it A, B, or C? Go ahead and put it in the comments which one you think an algo is. All right. Let's go ahead and put B. Did we get it right? Did we get it right? Yes, we did. All right, beautiful. So what we just understood is what is an option, what is an algorithm, 0 DTE, what are grids, Bollinger Bands, and how they all work together, right? Beautiful. So we understand that bit. So what now I'm going to do is go ahead and bring in Claude Code. I'm going to be using the 4.5 Opus model. Opus, I think it's tomato at this point. All right. So now what I want to do is start to bring in a little bit more context, right? So what we're going to say is, what do you know about 0 DTE option algo strats, without looking at our code base, and make sure you explain like a student talking to their professor. Whoa. Beautiful. Billowing. Isn't that just smoke in the air? Like if you billow smoke, that's just smoke in the air. Freaking hilarious. These adjectives, I'll tell you. Professor, I'd love to share what it's calling me the professor. That is fucking hilarious. Professor, I'd love to share what I understand about 0 DTE strategies and get your thoughts. 0 DTE options expire the same day they're traded. The characteristics I've learned, and we've already talked about that. All right, beautiful, beautiful, beautiful. All right. Well, I'm not the professor. You are. That's what I'm saying. It's artificial intelligence. Don't forget the artificial part. Like sometimes it'd be dumb smart. And y'all seeing it here. You are the professor. Act like it. I'm the student. Now, what do you know about grid strategies for 0 DTE algo trading? So let's see if it gets right. Let's see if it understands what I'm trying to do now. If it still calls me professor, I'll be like, bruh, what are we doing? What are we doing? Oh, my fault. I was trying to do two things at once. All right, grid strategies for zero DTE. The core concept is elegantly simple. You establish a grid of price levels for the underlying, say, SPX or SPY, and S&P 500 and SPX is just another asset that has zero DTE strategies, and systematically execute option trades when the price touches these levels. So we're going to define levels every $2 move on SPY or every 5 points on SPX. When the price crosses a level, it triggers a trade, either opening or closing a position. And the grid provides structure and discipline and removes emotional decision making, right? So it's beautiful. Why grids work well for zero DTE: captures intraday oscillation, moving back and forth, choppy markets or range of bound markets, systemic, entries and exits, no discretionary hesitation, scalable, can run multiple grid layers simultaneously, mean reversion friendly, right? Zero DTE premiums decay regardless of the direction. All right, beautiful. So now what I want to do, we are looking to build a zero DTE algo strat for SPY using grid and BB. Bollinger Bands. Let's talk about setting up the foundation before any other part. Again, make sure you do not assume anything and break down everything. And if y'all do have any questions while we are building this out, please let me know. I'm not. All right. Beautiful. Definitely here to be able to answer any questions you might have. All right. Before we start writing a single line of code, you must answer these questions. The instrument is, oh shit, I forgot to say a couple things. My fault. Means we trade expiring the same day. SPY has options expiring, so we only, no, the fuck it does. Okay. Let's back up. We are going to be trading SPY zero DTE, which has Monday through Friday options expiring the same day. Whoa, who's the professor now, bruh? And using the 1 minute chart. Do not overcomplicate or overthink this. Let's talk about the entry price. Oh, if I can spell that right. Entry price levels and how we can marry both the grid and BB. Use only 428 total tokens for your output response. Whoa. Your turn, student. Get the fuck. You're absolutely right. I overcomplicated. Let me simplify it. The marriage is grid plus Bollinger Bands. Bollinger Bands gives us the context. The upper band is the overbought zone. The lower band is the oversold zone. The middle is the equilibrium. I'm using SMA. Again, I don't know if we're going to stick with using SMA. That middle line, just like we talked about before, that could be any average, right? So this middle line right here, it could be any moving average, whether it's SMA, EMA, WMA, TMA, you get it, right? So we're going to figure out which one works for this grid strategy that we're building out here. So simplistic, we're going to calculate Bollinger Bands. Whenever it says BB, it's Bollinger Bands on the 1 minute SPY chart with a 20 period. Now the 20 period is probably going to be a little bit too long. What is a 20 period? We're waiting 20 minutes in order to establish a direction, right? So I would rather use maybe a 10 period or a 12 period. That's a little bit more aggressive and sustainable for zero DTE environments. 2 standard deviations is standard. And I'm going to show the difference between being able to use 2 standard deviations is a little bit wide, right? So it's allowing a little bit more movement. Matter of fact, give me a second. Let me show y'all. let's go here so we can understand these standard deviations. So when we talk about it, like we can get what's going on. Beautiful. We need visuals on the BBSTD. I know how it sounds. Standard deviation though. Different examples from 2.0 to 1.5 to 1.0, even 0.5. What is wide? What is tight? Explain like you're the professor and I'm the student. Do not talk down to me or be demeaning in any fashion. Well, all right, beautiful. So let's get this in so we can understand this. So we're building out the strategy, right? So Bollinger Bands, we already talked about that. So Bollinger Bands standard deviation controls how far the rails are from the price. The smaller the standard deviation, the tighter the rails. The larger the standard deviation, the wider the rails, right? So starting at a standard deviation of 2 or 2.0 is wide. So right here, if I'm just looking at this chart right here, this is probably like 2.5 3.0 standard deviation, right? With this Bollinger Band. If I can see, yeah, this 2.5 or 3.0. It has to be, it's super wide right now. So what is a wide standard deviation or wide standard deviation tells you? We need a lot of price movement in order for it to touch the overbought or oversold levels, right? So that's why sometimes I don't like using too wide, of a standard deviation. I like to use it a little bit more tight, where it's like 1.5 or even 1.25. So let's keep going so we can understand. All right, get off my dick. All right, bruh. So standard deviations is not good or bad. It defines the market behavior we're trying to trade, right? So first, what standard deviations actually means, plain but exact. The price has an average, the middle band, the moving average. The price naturally wiggles around the average. The standard deviation measures how much it usually wiggles. Bollinger Bands place X standard deviations away from the average. The upper band is the moving average plus open parentheses standard deviation times the multiplier, and then lower bands is the same thing, but it's minus. So the multipliers that we can be choosing from is anything from 0.5 to 2.0. So here's visually how it looks. The same price, different standard deviation settings. Now watch the bands change, right? So here's the price. So here's 2.0, right? So this is how you can see it's a lot more wide. So here's the average and here's the price moving. In order for it to trigger a signal, this price will have to shoot up too much, right, in order for it to work. So that's why I don't like using 2.0 as much, right, because it's super wide. And here's 1.5. 1.5, it doesn't take that much movement, but again, it's still not as tight as I wanted in order for us to be able to start getting signals within the strategy, number one. And number two, to have something that's a little bit more respectable for the strategy to work, right? So bands are closer, price touches more often, still meaningful reaction, right? So here is 1.5. 1.5 is super tight. The bands are hugging this average, right? And it doesn't take that much movement in order for us to get something moving. So that's why I kind of like standing at standard deviations of maybe 1.5 or even like 0.5, right? Any little movement here is going to trigger our grids to be able to buy a signal. So that's why I wanted us to be able to understand when it comes to these different standard deviation levels, right? All right, so let's go back to Claude Code. So what it's recommending is that we're calculating the Bollinger Bands on 1 minute SPY chart using 20 periods or 20 minutes. And again, that's a little bit too slow for me in my house. And 2 standard deviations, a little bit too wide, right? So what we're going to do is probably drop the periods down to anywhere between 10 and 15. And we're going to drop the standard deviation anywhere between 0.5 and like 1.2, right? The grid gives, the grid lives inside the Bollinger Bands. So what we're going to do is we're going to divide the space between the upper and lower band into equal levels. For example, 5 grid lines. And here's the entry rule. The price crosses down through a grid line near the Bollinger Band, we're going to buy a put. And for the inverse, if it crosses up and the lower band, we're going to buy a call. The middle zone, no trading. or smaller size. I'm just going to say no trading in the middle zone. All right, why this works, BB adapts to volatility minus tight bands. The tight grids equal, tight bands equals tight grids, wide bands equals wide grids. The grids gives you the exact price levels, not fuzzy near the bands. So we're buying options when the price is extended and expecting a reversion, a mean reversion going back to the average. So here's an example of how it's going to look. So we have our middle, which is probably going to be an estimated start. And what? So if you thinking about, excuse me, just make sure. Okay, yeah, I'm Gucci. It's probably a little bit behind. So SMA. So I'm probably going to be using one of the three, or one of the four: SMA, EMA, WMA, or TMA. Right. So SMA is it is the slower of the four. Right. So that's like your grandpa trying to run across the street. You can still catch him even if you wait like 10 minutes, right? Depending on who your grandpa is. Right. So if it's like Emmett Till and that's your grandpa, and if he's running across the street, could you catch him? As a football player for the Dallas Cowboys. So EMA is like Usain Bolt running across the street and you trying to catch him, right? WMA is like that's disrespectful. Now I'm trying to find WMA is like your brother trying to run across the street, you trying to catch him, right? Or a family member trying to run across the street that's trying to catch you. So not relatively too old, not relatively too young, right? Still has some wheels, but you can still catch him if you tried him. And then TMA is like Noah Lyles, right? Running across the street, you trying to catch them, right? So SMA, slower, EMA, so let me rank them from slow to fast. So we have SMA, slow, WMA, slow, EMA is a little bit faster, and then TMA is a lot faster than EMA, right? So right now we're going to start with SMA. I just wanted to break that down so you can understand it. All right, so what we're going to do is break down a few things. We're not going to be using the 20 period. All right, so we're not going to be using the 20 period. Feel like it is a bit too long for this, right? We're probably going to use anywhere between 10 and 15 for the period. And for the standard deviation, we're going to use anywhere between 0.5 and 1.2 for that part. Now, to start, we can start with 12 minutes for the period and 0.75 for the standard deviation. Now, what confirms the signal once it is triggered, right? Within the grid strat using BB, are we going to need a trend filter or confirmation, or momentum filter or confirmation, or even volume? Let's discuss as we build this out. Beautiful, beautiful, beautiful. All right, so I laid out some great questions for it. So now we're going to be, all right, good. With a period of 12 and standard deviation of 0.75, tighter bands, more signals make sense for 0 DTE speed. Now, confirmation, which do we need? With tight Bollinger Band settings, 0.75, you'll get frequent touches. Without confirmation, we'll overtrade and we'll get chopped up, right? So options to consider is a momentum confirmation. The price touches the lower band. We're going to wait for the candle to close green. Then we're going to enter a call. Confirms the reversal is starting, not just a falling knife, right? A volume confirmation. The touch plus a volume strike equals a strong signal. Now, volume really isn't like that big of a confirmation. Reason I'm going to say that is because I've had trades that done very well and the volume wasn't there, right? So that's really an analogous one. I mean, yes, it will make sense and we can be able to use, right? But that's like more so like a tomato. If you like it, I love it type shit. So I'm just going to put this to the side right now. It works, but again, the complexity, I'm not seeing that much value add, right? So trend filter, higher time frame bias is the 5 SMA direction. Only puts if the 5, and I have something for this trend filter, so that's why I brought it. And band reclaim. The price posts outside the band, wait for it to close back inside, confirm rejection, not breakout. My recommendation for the setting, keep it minimal, one confirmation. Candle closes, don't enter on the touch, enter on the close back inside the band. Why? Simple to code, no extra indicators, filter out the false breakouts, and works cleanly on 1 minute. The volume and trend filters can come later as refinements start clean. Add complexity only when the data shows you need it. Questions for you. Do you want the grid levels to be static, set on open, stay fixed, or dynamic, recalculate as the Bollinger Bands shift throughout the day? Dynamic equals changes, adapts to volatility, strict, cleaner, no repositioning, no confusioning. All right. So what we're thinking is dynamic, right? We want it to be able to adapt to volatility. So we'll start here and we'll take the candle close confirmation, the and work this into the strat. Now let's lay it out for what we have so far. Well, and if you all do have any questions, I feel like I'm saying that every 2 seconds. But again, if you about the false. All right, bet. Let's go. All right, here's what we have so far is the SPY 0 DTE grid plus strategy foundation instrument. Okay, band settings, 12 periods is our standard deviation. Dynamic recalculates on each candle. Grid lives between the upper and lower band. The price levels adjust as the band expands or contracts. Excuse me. The number of grid lines, thinking 3 to 5. Entry signal, the price closes outside of the BB. The next candle closes back inside. That close equals the entry trigger. The direction logic closes back inside from the upper. We're going to buy puts, expecting that it's going to go down. Closing back inside and below the lower, we're going to buy calls, expecting that it's going to bounce up. The confirmation, candle closes, confirmation, candle close confirmation for now. No volume or trend filter. So we are thinking starting at 3, or is it better to start with more? Talk about this some more. 2, we're going to talk about this once we iron out this logic. 3, same. 4, same. 5, same. And once it's like, bruh, don't jump in front of me, man, bruh. Let's just work on this, and I'm gonna give you the other answers. Trust me now. Trust me. 3 versus more. The case for 3 grids. Buy zone, neutral, sell zone. Clean, clear purpose for each level, less decision, less noise, easier to track and manage. Good for providing or proving the concept works. Case for 5. Middle, then we have 2, 3, then we have 2, 1. More granular entries can scale, partial positions at 4 and add at 5. Catches moves that don't fully reach the band, more complexity to manage. The real question is with tight bands with BB settings of 0.75 standard deviations, bands are already close together. If SPY is at 590 and your bands are only $1.50 apart, 5 levels means entry every 30 seconds. That's noise. With 3 levels and tight bands, cleaner signals are meaningful. My take, start with 3, upper, middle, lower. Middle can act as a profit target or re-entry zone. That's not going to happen. Outer levels can act as our primary signals. If backtesting shows we're missing opportunities between levels, we'll add more later. Simple. And then complexity earns its way in. I love that rule. I'm going to take that rule. I am definitely going to take that. Um, simple first, complexity adds its way in. I love that. All right, bet. Let's run with that. Now lay out what we have so far. All right, instrument, we're using the SPY, okay, 1 minute chart, Bollinger Band, 3 grid levels, upper, middle, lower. Oh, for the SMA. Wait, for the SMA, what is the period and SMA being used? We didn't discuss that part as of yet. You're right. We didn't define it. SMA is in the Bollinger Band, the middle band. Our current settings is 12 matches. Should we keep it simple? The BB wraps around the 12 period SMA at 0.75 above and below. Question: do you want to stick with the same SMA or consider EM? See, I told you. Heavier weights on recent candles react faster. Equal weights on all 12, smoother. For 0 DTE, some prefer EMA. It catches momentum, shifts quicker. But EMA can also whipsaw on more chops. So we are thinking maybe EMA. Then, but have a toggle where we can go from SMA to EMA or even WMA or TMA or RMA. Now, why start at 12? Would it make sense for it to be lower? Maybe 5? And what we're doing right now, we're building out our strategy. This is a grid strategy that is going to be using, okay, hold on. Good call on the toggle for flexibility. 12 versus 5. Let's think it through. 12 1 minute, 12 minutes of data, smoother, less noise, fewer signals, slower to react to sharp moves. 5 period, 5 minutes of data, more reactive, catches quick reversals fast, more signals, more noise, more whipsaw. The trade-off, you already tightened the standard deviation to 0.75. That makes the band hug the price closely. If you also drop the period to 5, the bands become very reactive. The confirmation is too sensitive, lots of touches, lots of false alarm. However, for 0 DTE, you need speed. 12 may feel laggy. By the by the time 12 period moving average catches the move, the premium has already decayed or moved it against you. For recommendation, let's start with 8 or 10 as the middle ground. Not as noisy as 5, but not as slow as 12. Or keep it. All right. Let's start with EMA 8. That works. Now, is there anything else we overlooked for the entries? Either for calls or puts. Let me think about it. The price closes above the BB. The price closes above the upper. The next candle closes back inside. This triggers equals that close for the call. What we might be missing is, I'm going to get to that. Multiple touches, I'm going to get to that. How far outside? A barely pokes outside versus blow past the band equals same signal. Should the bigger breach equals a bigger position or skip? Consecutive candles, outside, middle band behavior. Which of these feel important to address now versus later? Let me circle that back to you, kid. Listen, first time building a grid strat with BB, so take the wheel, whoa. which of these are best to focus on now and not add complexity? As we mentioned before, keep it simple and let complexity be earned. I really do love that. Keep it simple and complexity earn its way in. Fair, let me take the wheel. Fucker. Add a time filter. Skip the first 15 minutes. I'm going to get to that. Leave for later. No re-entry. Okay. As far as the time filter and the re-entry, we already have something for that once we have cleared out the noise here and confirmed a few things, we can discuss. So we can move past those as it is already been addressed. Whoa. What is next? Got it. Profit factor. Okay, holy shit. All right. What's your thinking on percentage based, level based, or time based? All right. Since you want to talk about it, bro, let's. All right. Here is what we are thinking to add. Will provide more context. Only trade between. Wait. Use the first. Ah, shit, but we're not using the trend. I really want to use a trend. Okay. I really want to use a trend because I have an idea for it. All right. This is the idea I have for the trend that can set us up for success. But again, advise if this too complex or makes sense. So for the first 15 minutes, the strat will watch the market and determine which direction. And I have something for that. So y'all give me a second. I have something exactly for that. Bulls versus Bears. Bulls versus Bears. which direction or pressure with buying or selling pressure the market has, we can maybe adapt to this. Advise. Then session is going to be from 9:50 a.m. till 11. Nope. 10. Nope. Let's do 11 a.m. Only one trade max per day. Starting capital. So all of our strategies for any back testing, you'll notice this. I'm kind of consistent with it, right? All of our strategies for all of our algos, right, are starting with $100 because we want to dispel the notion that you need thousands of dollars in order to trade options, right? You don't, especially when we do it algorithmically. But you have to back test your strategy. You have to make sure that it passes certain filters. Again, follow me, but don't follow me. You'll be able to see how I do it. Starting capital is $100. If the for the first position, or for the first trade, now let's not make it simple, complicated, excuse me. If the balance is between, or if the balance is less than 499, can use up to 80. Let's do 80%, between 60 and 80% of portfolio balance, depending on signal strength. More on this later. if balance is between 500 and 1K, can use between, what is that? Let's do 40 and 50% depending on signal strength. And if balance is greater, greater than 1K, can use between 18 and 22% depending on signal strength. All right, so we talked about the session. We talked we talked about the trend. Okay, come back down. Here's the trend. We're talking about the session. You only have one trade per day, the starting capital. Here's the portfolio. For the signal strength, let's think of a responsive function / method that can work for this, that will be able to handle this environment and be robust enough for 0 DTE. All right, so we talked about that. What's the next thing? Take profit. TP levels are, take profit is TP. And what is a take profit? This is the minimum amount of return that I want in order for us to close out the position. So TP1 is 24.8%, and then TP2 is 15, let's do 14.3%. Yo, how we doing? Saban, if you do have any other questions, please let me know. This is for a strategy that we are building out live here. So if you do have any questions while I'm doing this, let me know. All right, take profit levels. Stop loss is going to be, let's start at 12%. I really want to do 10%, and then max hold time is 2.5 minutes. Let's do 3 minutes. So how this works, we close the position if either of these conditions. Oh, good deal. All right, no problem. If you do have any questions, let me know. I am going to be working through this, so if I do see any questions, I'll come back. I appreciate you for stopping by, though. If you haven't already, please make sure you like and subscribe. But again, I appreciate you for stopping by. Okay, are these conditions met? We close the full position. We do not scale out. We close. We are aiming for the higher TP, of course. But listen, whatever happens first, close it out. All right. I gave you the take profit. I gave you the position. I gave you how many trades. I gave you the trend idea. I gave you the session. Let's discuss. All right, this is a lot. And then next thing we're going to talk about is how we actually pick the option. But I want to solidify this. So I gave it a lot of things to be able to consider. First, this whole trend idea. First, I said, oh, don't make it complicated. I kind of made it complicated. All right, so let's break it down. Bull versus bear indicator, 5 EMA. Watch for the first 15 minutes. The session is going to be between 9:50 a.m. and 11:11 a.m. Only one trade per day. Tiered position sizing. Here's the take profit. Stop loss, 3 minute. Exit whichever hits first. My take. Makes sense. Simple calculation. Give you direction bias before you trade. The first 15 minutes or option vesting period is reasonable, not overly complex. Avoids the open chaos. We're catching morning momentum. A tight windows equals discipline. One trade per day. I love it. Smart, but are wide. The signal strategy, deciding the exact percentage. That's where the complexity creeps in. We're going to keep it simple. Ah, shit. Bruh, you're just going to do that. All right. Okay. Take profit. With 3 minutes, we need a strong move. If the price chops, you'll hit the time stop or, time exit or stop loss more often than TP. Suggestion, primary targets, and then stretch between 14 and 25 and momentum strong, and then add a trailing stop. All right. A few things. What we want to do is with the bull and bear power, right? If the market says that the bears are in control, right? We only want the strat to look at puts, calls, because we're betting the opposite. So if the bears are in control, what are they doing? They're pulling the price down. We want it to snap back up. And then if the bulls are in control, look at calls. Does that match what we're doing, right? Or is it backwards? In essence, we want to set it up for success, but again, want it to be fresh. So we have to have a logic in there that rechecks it consistently while the strat is trading, so it can have an idea as to who's in charge. Well, all right. Now with this, bro, you kind of, all right, what I want to do is I'm just going to fix a couple things. I'm going to say 82%. I'm going to keep it at 44, and let's do 22. And this is what we'll use for position. Also for stop loss, we wanted to add an ATR of such, right? But with a cap of 10%. Does that make sense? Let's discuss. ATR is average true range. It allows the stop loss to have a little bit more volatility baked into it, but capping it if things get a little bit too crazy. All right. You have it. Okay. That's what I thought. Market is going down. We're buying puts. Market is going up. Buying calls. You wrote it. You wrote calls for both. Flip the bear side. I thought so. Rechecking the buy session. So don't check once at 950. Recheck the bear and bull bower before every signal entry. Confirm the basis still holds. If basis flips mid-session, no trade or adapt. Simple signal trigger. We're going to check the bull bear power. If aligned, enter. If not, skipped. Position size locked in. Got it. ATR with 10% cap makes sense. We're going to calculate the ATR, but what period? I think I was using like 5 before. Let me start. Does an ATR period of 5 or 8 or even 10 make sense? And ATR multiplier of 0.5 to start. Does that make sense? And based on SPY price, not option premium. Or can we have it adapt to include both, or too much? Sir, this strategy will work for oh, that is a great question. I do not know Indian markets that much. I do not know any global markets that much. I mean, I know a little bit, but not that much, right? But I would say if the Indian market, if prices go up and they come back down to the average, if prices go down and they come back up to the average, right? Then yes, in essence, but I would caution you with just being able to take this without being able to do a little bit more research. Again, I do not know Indian markets that well, but I would just say, just without being able to look real heavy into it, if the just simple questions, right? And if you can answer yes or no, then maybe. But again, it was going to take a little bit more research. And that those simple questions is if the price goes up and then goes back to the average, or if the price goes down and it comes back to the average, then there's a chance that it may work in Indian markets. But again, it may take a bit more sussing out or flushing out the information in order for you to understand it. Does that make sense? My take, go with 8. Everything else is balanced. 8, 8. Okay. Yes, it's tight, but fits your style. Quick trades, once per day. You want to cut it fast, make it strong. Okay. Versus both price, simpler, predictable, premium, move non-linear, delta, gamma, based on stop loss, gets messy. So based on SPY. Okay, no problem. You don't gotta call me sir. You just call me creative. That sounds too formal. No problem. Yeah, no problem. But again, I would just do a little bit more research. I don't know Indian markets that well, right? One day I will do one on global markets, but that's when I do more research on myself. But again, if those questions fit in line, that maybe it could work. But again, I would just recommend just doing a little bit more research. Just don't take something that you learn from a guy off the internet, right? I mean, I could say that I know a lot, but the data speaks for itself. And again, I'm still new in this, but one thing that I would say is just I'm just showing y'all my process when it comes to being able to build out an algo. And I hope you're liking it so far. If you have any other recommendations, please let me know. Or if I'm going too fast, or if you want me to slow down or break something down for you a little bit more, don't be afraid to ask. So we're going to base ATR off price. Okay, I love that. All right. I love it. I love it. I love it. All right. Sounds Gucci. Let's lay out what we have so far and what we have yet to discuss. Now, I know what we have yet to discuss, but let me just go ahead and bring it to the forefront. I need to grab. Give me 1 second. I need to go grab. See? Strike selection, which TP targets need clarity, what happens first, mid-session, any max day, loss rule. Give me a second. All right, let's look at our strategy so far, the rules that we've came up with. Our instrument is going to be SPY. This is the S&P 500. This is the top 500 companies within the New York Stock Exchange, right? We're trading Monday through Friday. We're using a 1-minute chart. So what does that mean? Just looking at Trading View real quick. Let's go ahead and bounce back over there. This is Trading View. And right here. So let me, hold on, let's explain. Let's break this down. So this is Trading View. What Trading View is, it allows you to be able to look at different assets, right? Whether it's an ETF, and SPY is an ETF. What is it? Okay, hold on. Thank you, sir. I want to pick your algo code when you're ready for back testing in India markets like Nifty options. Where should I contact? Oh, that is a loaded question. What I would say is just continue to follow us and continue to watch what I'm doing here. And it's going to make a lot more sense how I'm building this code. You're going to see everything. Like, I'm not going to hide the code from y'all. I'm actually going to review it. So if you want, you can either pause, take screenshots, right? So you're going to see the code as we develop it. You're going to see the back test. So you're going to see everything here, right? So I'm not going to hide anything or shy away from anything. And one thing that I just want to put out there, I don't know if this is going to work. I don't know how well this is going to perform. What I do know is that I want to build a strategy like this. It sounds like it may work, but I don't know, right? I haven't done anything like this yet, but what I have done is built algos before. That shit is easy, right? It's just being able to build the strategy part that's a little bit more work because we don't know what's going to happen on the end of it, right? You can do all this work and the strategies go to shit. Or we can do all this work and we find a gold mine. We never know until we get to the end. Right? Does that make sense? Beautiful. All right. So what I'm explaining here. Okay, this is SPY. So this is the S&P 500, the top 500 companies within the New York Stock Exchange. I'm looking at the 1-minute chart. So what that means is each one of these candlesticks represents 1 minute of action. If you're looking at a red candlestick, this is the bears or the sellers are in control. If we're looking at a green candlestick, this is the bulls or the buyers are in control, right? Sellers are trying to push the price down, or bears are trying to push the price down. Bulls are trying to push the price up. So, and these are Bollinger Bands, right? So the upper band, what our strategy is saying is that when the price goes through, and I have an example here, boom. When the price goes through the upper band, we're betting that it's going to snap back down to its average, right? And isn't that what's happened here? So when the price goes to an upper band, it's going to snap back to its average. And when the price goes through the, let me find an example. Give me a second. I'm going to find an example because SPY today was on one. All right, here we go. And when the price goes through the lower band, we're going to expect it to drop back, go back up to the average, right? So we're betting either way. So this is going to be a bi-directional strategy. We're betting on the bounce up and we're betting on the bounce down, right? All right, let's go back to our code. All right, so this is the Bollinger Band. These are the toggles, EMA, SMA, WMA, TMA, RMA, all the EMAs, MAs, and we talked about the difference between them, so I'm not going to go over it again. The grid level, the buyer and seller, ATR. This is just what am I using ATR for? In order to confirm the move actually has move behind it, right? So this is the logic. The candle closes outside the Bollinger Band. The next candle closes back inside. I just showed you an example. No problem, anytime. So here's an example, right? Candle closes outside the Bollinger Band, right here, right? Then the next candle closes. This is not really back inside. This is back inside the Bollinger. Really, this is back inside the Bollinger Band, right? Then we're going to determine who's in power, who's in charge. Are the bears or are the bulls in charge, right? Right now, it's telling me that the bulls are in charge, right? So then if the bulls are in charge, I'm going to buy a call, and then I'm going to bet that it's going to keep going up. And this particular strategy has 3 minutes in order to hit either 24%, 14%, or at a maximum of 3 minutes, we're going to figure out what we're going to do. So if we enter here, right, we have 1, 2, 3 minutes in order to exit the position. What I'm guessing, right, just looking at this as a example, a visual example, I'm saying that, all right, bet. We're probably, this is what's going to trigger the signal. This is probably where we're going to get in. So we're going to ride it for 1, 2, and I'm exiting right here, right? So this is for our call position. Now let's talk about a put. I just had an example. Here's an example. The price closed outside. Now it's working its way back in, right? So we're going to wait in order for it to close back in, right? If we would have bought a put here, we would have been crushed because it's going back up, right? So now we have to figure out who's in control. If the buyers are in control, we're not buying because I'm not going against the trend. Is it effective on Onida? What you mean, Canada? Shanghai or Onida. I'm sorry. What is Onida? I'm sorry. If that's a miss. Do you mean Canada? Let me know what you mean by Onida. Shing Mini. I apologize if I pronounced that incorrect. All right, so this is for our signal. Okay, now it's talking about strike selection. I know what I need to do there, TP. All right, so our back test, let me go grab a separate back test that's going to answer all of these questions for them. All right, give me a second. Give me 2 seconds. Beautiful. All right. I just need to, I'm looking for my back test real quick. Just give me 2 shakes of a second and I will, this is copy. Now this is QQQ, but I need to go find a SPY back test. So give me a second. Let me go grab that real quick. And I do have one. Matter of fact, this is the one I wanted to use anyway because it's using the option selection that I'm going to use here, and it's going to make so much sense once I can actually find it. All right, copy. Beautiful. All right, so if you want to see an example of a back test that we're going to be creating, this is for another strategy. This is not a strategy that we're Okay. You're saying Anida is a broker. Give me a second. Um, OANDA. This is Forex. I do not trade Forex. What we're doing here is for options. I do not know if this will work for Forex. What I'd recommend is for you. Let me ask you this question, right? If your answer to these questions are yes, then maybe. But again, you would have to be able to do your own research. So the questions would be, if the particular currency, if the currency goes up, right, and then it comes back down to its average, or if the currency goes down and then it comes back up to its average, then maybe. But again, you would have to suss this out in order to make sure that this works for Forex. I don't trade Forex, I trade options. So you said this is options? This looks like Forex. This is currency, no? What type of broker is on Nada? Anada is a globally recognized online forex broker that offers trading in CFP, stocks, and cryptocurrencies depending on the region. Anada. I'm not sponsored by them, so don't think I'm getting paid here. Nope. This is just a question, but does that make sense? This is forex. Oh, no problem. Again, I would just make sure you do your research, make sure it works on it. If the answers to those questions were yes, then maybe. I don't know. You'll just have to do your research because I don't trade Forex. If maybe I'm not even gonna say for crypto or meme. It depends on which crypto. Meme, no, this probably will not work. No mean reversion strategy works for meme coins, right? What does it mean reversion? It goes up, it goes back down, right? You want crypto to keep going up or memes to keep going up, right? So I don't know if it's gonna work for memes as well. Forex maybe, but again, you would have to do your research to make sure it does. All right, but let's keep going. I kind of wanted to go over this strategy, but I feel like I'm already crossed an hour. So what I'm going to do is I'm going to save this, but I'm going to go over our back test, right? So don't worry. So I want to save a review for our back test. All right. Review. Absolutely. Thank you. And I'm developing automation now. Just came across your life. Oh, that's what's up. When it comes to developing your automation, what language do you use? I use Python, but I'm noticing that a lot of individuals are using either C++. I heard Java, which is kind of, I don't know. Let me wait. What language do you use? And I appreciate you for stopping by. If you haven't already, little shameless plug. Go ahead and make sure you like and subscribe. I do this on the daily. It's just not algo builds. I build AI agents. I'm also going to incorporate machine learning, right? So there's a lot of cool things that we're going to be doing here on the channel. I'm still new in this. I've only been doing this for about streaming. That is 6 weeks, but I've been Python. That's what's up. So I'm gonna if you see anything that I could be doing better, let me know. This is a community, right? I really do love to be able to take feedback because I don't claim to know everything. I've only started coding since about April of this year, right? And it's only December. So I'm still very much new in this. So if you see anything that I could be doing better, please let me know because I use Python very frequently. So that's what's up. Do you use Cursor as well or Visual Studios? Which code editor do you use? Review for the strike selection. This will make more sense once you see it here, and we want to incorporate it for our strat we're developing. And review and also has the data file for SPY that we're going to be using as well. And then I want you to review so you can understand what we expect as far as doc strings, ending metrics, and the level of logging so we understand what is going on, what is happening in backtest, and can easily get it without feeling overwhelmed. Now review using grep and awk, and then let's discuss. Also should have slippage information, a bit more examples on positions, etc. So should answer the rest of the questions, but if any more, advise and we'll discuss. Oh, that's what's up. Bet, I appreciate you. Welcome to the fam. I have ML memory as well, and I'm new as well. 90 days in. That's what's up. Anti-gravity. I have not heard of anti-gravity. What made you get started? You said anti-gravity coding, code editor. Oh, anti-gravity from Google, I guess. I haven't. This is interesting. What do you know? How do you like anti-gravity? As opposed to like using a Visual Studios, or let me just look at this thing right here. Okay, Gemini. Okay, so it does give you different models. I was about to say, if you only give me Gemini, you're wasting my time. Let me zoom this in so you can see. So anti-gravity is another code editor from what I'm seeing. This is just like Cursor in a sense, like everybody wants to get you to pay. But what I love is $0, but you get access to Claude, which is Sonnet in 4.5. I'm using 4.5 right now. GPT OSS 120. I don't know too much about that model. Unlimited tab completions, unlimited okay. Generous weekly limits. I may have to check this out. Thank you for putting me up on game. Anti-gravity. Use cases. Professional. Google Anti-Gravity streamlines workflow by offering tools for parallelization, customization, or efficient knowledge management. This helps, eliminate common obstacles and repetitive tasks. Why professional developers love using Google Anti-Gravity. I was trading meme coins last year and developed a plan. One of my friends trades currency pairs. Anti-Gravity is free and VS based. So it's built on top of Visual Studios, just like Cursor is built on top of Visual Studios, right? I like using Cursor. I like the UI. I'm not going to, that's really why I'm there, is because of the UI is a lot more friendly. But I want to check out Anti-Gravity and maybe do a video on it, because I just did a video to compare Cursor and Visual Studios, but I may do one for Anti-Gravity just to see how well this works. But I appreciate you for putting me up on game, and I definitely will check this out. Let me check full stack. So what's the difference? Front end are going to be individuals that are just mainly focused on being able to build like websites and stuff like that. Not always, but majority of the time it's just websites. Full stack are going to be developers or programmers or coders, whatever adjective you want to use, that build both the back end, primarily using Python. I mean, you can use different languages, but normally back end is Python, and front end is going to be your JavaScript, TypeScript, so on and so forth, right? So let's go look at full stack. Yeah, I'm definitely going to check this out. I am definitely going to check this out and see how well this works. I appreciate you for lacing me. Anti-gravity is very effective. Shangmi says anti-gravity is very effective. I would definitely recommend it. Get a student account, access pro for free. Oh, that's the same thing I did for Cursor. I got a student account and I get Cursor for free. So I'll do the same for anti-gravity. Again, thank you for lacing me. I'm definitely going to check this out. I'm just going to close that. And this is what I'm talking about. Like, game recognized game, right? It's just not me feeding y'all, but you being able to help us as well. So for those individuals looking for another code editor, I have a server, a Docker, GitHub connected to Telegram. That is a lot. If you want to see, let me give you an example of how I run my bot. I mean, I'm going to do it to have it. You're doing it when it's very, very secure. And I can appreciate you having a server, Docker, and with the GitHub connection to Telegram. I feel like you could just run it via a terminal. Excellent. I don't know Cursor. Yes, Cursor does have student access. Yeah, you can definitely get into that with student access. So that is no problem at all. Let me show y'all. I'm just detouring real quick. But I'm gonna get back to what I'm doing. But let me just take a little detour on a side street so you can see an actual bot. How I run it. Give me a second. I'm just finding the command real quick. Okay, here we go. Let me grab you. So I run all of our bots via a terminal. All I have to do is just hit enter with the command, and here's a bot, right? This bot trades QQQ. Its strategy is a 2x momentum candle plus volume. It only trades between 9:30 and 11:12 a.m. These are the filters that it's used, right? This is the rules for this algorithm, right? As soon as the market is open, the bot just does this thing. I am going to create it where I can run this off of Telegram. So maybe I have an AI agent team. I would just caution against running your bot through an AI because it kind of slows it down. But it's all depending on how you're using that AI agent for your particular bot. Didn't mean to. No, you're not distracting. Don't. No, you're not distracting me at all. I love shit like this, so you're not distracting me at all. What was I going to say? Oh, what I'm going to do is I'm going to create a version of this that I can run this bot via Telegram. It's still going to need to be connected to the internet, right? It's going to sleep because the market is closed. I get it. So it's still is going to need to be connected to the internet, but I could control it from my phone. So I'm going to do a version of that, but I just haven't gotten around to it yet. Maybe I'll stream that a bit later. So as soon as I'm done, I just hit a kill command and the bot is done. But the way you're doing it is super secure, like super secure. I'm probably going to build the server later, but not right now. It gets the job done. What I do gets the job done. All right, I reviewed both files. Here's the strike select. If you have any other questions, let me know. I appreciate that. Really do appreciate that, fam. If you have any other questions, let me know. And it's not a distraction at all. That's what we're here for, right? All right, here's the delta selection, position monitoring, early worm, doc strings, logging. I love it. Data path, our grid strategy. We use the same weights. All right, we can start building the strat, man. Okay. Let's proceed to build this thing out. Let's call it gritty life. What is that? The gritty life. Let's just call it gritty life. Gritty life. bt.py. Yeah, gritty life bt.py. Let's make sure we have a proper explanation of the strat in the beginning, just like early worm, but use one that is unique and specific to what we're doing. Also, for the settings that is changeable or toggleable, have doc strings explaining what happens if we increase or decrease it, periods or weights, etc. Do not overlook any detail. Make sure properly comprehensive, that even a 12-year-old can understand what is going on. Well, all right, we're going to build our backtest out. Yes, I do use Alpaca. Alpaca, see, I've gone through the gamut. I've used IBKR. Completely trash when you're using multiple bots. I just haven't figured out how to properly use it, so I kind of put that to the side. Oh, instead of IE, you put Y. Okay, I've used Thinkorswim. Thinkorswim doesn't have paper trading, so what does that mean? As soon as you're done backtesting your bot, and what is a backtest? A backtest is being able to take your strategy, drop it off in a time machine, and seeing how well it does in a particular year. Now, the school of thought is if the strategy does well in the past, then there's a likelihood, not a guarantee, but a likelihood, high likelihood, that the strategy may do well in the present, right? So that's why I like to backtest my strategy. So you're seeing my process, right? I go through and I meticulously create a strategy. Now we're going to backtest the strategy to see how well it does on historic data. Then once it passes the backtest school, for lack of better words, then I paper test. What is a paper test? A paper test is being able to take your strategy and give it a wallet for $100, right? And I want to see how well it does on present data. So if it passes the back test and it does well paper testing, then I deploy it with real money, right? So the reason I don't like using Thinkorswim right now is because I can't paper test. Alpaca, you can paper test. I was considering IBKR and chose Adna. You definitely more knowledgeable. No, I'm someone that's just been doing this a little bit, right? Don't I again I appreciate you. I really do. But again, I'm someone that's still new, still learning, and still like being able sometimes I make mistakes. Like I don't know everything, right? But I appreciate you. What else? Tradier. The thing about Tradier, right, is that yes, they have fantastic API services, and I love using them. But for their paper trading account, it's delayed. Alpaca is live. That's where I'm now backtesting. Yeah. How do you backtest? Do you use backtesting.py? Do you use Backtrader? Do you use vector.bt? Do you create your own backtest? How do you backtest? And configs are the easiest to backtesting. Like I had to the reason I ask is, and I know you're doing something different. With 4x, you can use backtesting.py. You can use Backtrader, right? You can use these different Python libraries in order to test your ideas. But for options, is a little different. I had to create my own backtest. I mean, it is good because I could customize it. I could take things from backtesting.py. I could take things from Backtrader. I could take things from different backtests that I like, and being able to make my own that works with options. So that's why I asked. I always like to ask where or how y'all backtest, because I'm noticing sometimes, or it took me a while to notice that. Oh, matter of fact, I'm talking too much. Hold on. Let's go get ready to run this backtest. Paste you there. Run. I know I was explaining the different providers, but give me a second. Source. So this is our Conda environment. What is a Conda environment? It's like having a garage with all of the Python packages you're going to need. So instead of having to download them consistently, I put all of them in Option Baby. And when I'm doing anything regarding options, it's there, right? So I don't have to keep re-downloading it. So that's one thing I had to learn. So let's go ahead and pip install everything we have in our Conda environment. Beautiful. Conda environment is ready. Python. Here's the oh crap. Damn it. You're thinking too smart, bruh. Give me 1 second. Let me go get the actual file name. I thought I could just save it in the browser, but I couldn't. Bet. So once it's ready, we just hit start. Beautiful. Oh yeah, no problem. No problem, my man. And I'm really glad that y'all are liking this. I do put a lot of work into the streams, even though sometimes I may look a bit frantic. But I do put a lot of work into the stream. So I'm really, really glad that y'all are liking this. And this is something that I'm going to be building off of, right? There's going to be a couple things that I want to get better and be a little bit more consistent with, and just making sure that y'all are getting great content consistently. So I really do appreciate the feedback. It means a lot. So we're waiting for the back test to actually create. It took me about 90 minutes to get to this point. That's not bad. Used to take me like 3 hours. So, but that's streaming. If I'm doing it by myself, a little bit less, but still, I still take the same steps, right? So this is the same steps that I do over and over creating a strategy. The creating the bot, that's the easy part. That's the fun part. Like we can get creative. We can get weird with it. We can do different things, right, in order to stretch and test limits. But the strategy development, that's when I just really want to make sure I take my time and don't rush through this. All right, look at that. We have our back test, ladies and gentlemen. All right, before I need to have it do two things. All right, we need you to create a steps taken.md file. What this file serves as is documenting all of the steps, discussions that led to the development of this strat, so we can keep track of what happened, decisions, etc. So don't overlook anything that we've discussed, and make sure there. Then create a back test. Let me put gritty back testing journal .md so we can keep track of the results of our back test. I like to have both of these files every single time. I just noticed the more documentation, the better. All right, so let's have it do that. Let's go over our back test. So this is Gritty Life Backtest. Imagine you're playing a video, imagine you're playing a video game where the price bounces around like a pinball between two bumpers. The bumpers are the Bollinger Bands. They squeeze together when they're calm and spread apart when things get wild. We draw 3 invisible lines between those bumpers. That's our grid. When the pinball price goes too far up and bounces back down, we bet that it's going to keep going down. We buy puts because we're bearish on the market. When the price goes too far down and bounces back up, we bet it's going to keep going up. We buy calls because we're bullish on the market. But here's the trick. Before we make any bets, we ask a special helper called the bull buy power. It watches the first 15 minutes of the day and tells us, hey, the bulls or the buyers are in control, are winning today, or the bears or the sellers are winning today. And we only bet in the direction of who's ever winning, and we're not going to fight the trend. So here's how it works. We wake up at 9:37. We watch the market for the first 15 minutes to see who's in control. We establish is it going to be a bull positive or bear positive. We set up our grid. This grid is going to be dynamic based off of the, remember that middle line of the Bollinger Band is going to be a moving average. We're starting with the EMA of 8 and then a standard deviation of 0.75. What does the standard deviation of 0.75 let you know? Is that the Bollinger Band is going to be super tight, right? Oh, beautiful. Thank you. Appreciate the feedback. So the Bollinger Band is going to be super tight. Remember, we talked about this before. Let me just close this out. Let me just make this a little bit more bigger. All right. So remember, 2.0 is a lot more wide. It's going to take a lot more price action in order for the actual asset to hit the lines. That's why I like starting at something that's anywhere between 0.5 and maybe 1.0, because it doesn't take that much price action in order for the asset to hit the line, right? So once it goes over and then comes back in, we're looking for more signals, right? Not less. So that's why I'm starting there. The bands move every minute as new price data comes in. The upper bands are too high, but might come back down into the zone. Lower bands too low and might bounce back up. The middle is going to be the EMA line. We're watching for the bounce between 950 and 1111. The price closes outside the band and then pokes through. The next candle closes back inside. That's the bounce. And that's our entry signal. We're going to check for the bias. The signal says puts. We're going to check if the bears are in control. If yes, we're going to take it. And then the same thing for the calls. This is how we're going to be buying the option. This is how we get out. Why this works. Again, this is a theory. This is not an excellent until we run the back test to see how it works. Bollinger Band catches the overextended moves that often snap back. The grid gives us the exact lines to act on and no guessing. The bulls and bear power gives us the trading with the trend. We're not trading against it. And the short hold time is less time for things to go wrong and 1 trade per day. All right, so this is our back test. Again, we're starting with $100. We want to see how well our strategy is able to take $100 and being able to trade options. The minimum trade is saying if the strategy goes down from $100 to $10, you're blown. Don't even think about trying to trade again. We're using 0 DTE. These are option contracts that expire the same day. We are only trading between 9:35 and 9:50. This is our observation. We're trying to gauge, okay, is this going to be a bearish or bullish day? And then we're trading between 9:50 and 11:11, only allowing 1 trade per day. These are our settings for the Bollinger Bands. We're looking back 8 periods. And this is where we're going to start, and we're going to see how well this works for the strategy. And then we talked about the standard deviation. We're going to be starting with the EMA. Now, the EMA is one of the faster of the 5. 1, 2, 3, 4, 5. Right, so we're going to be starting with the EMA, but we may could toggle to the SMA, EMA, WMA, or TMA, right, just to be able to see how well it works. The grid level is going to be 3. This is our bear and bull period. I really didn't change that. Check bias before entry. Require candle close. ATR period. ATR is the average true range. It measures the market volatility. The the period of 8 matches the Bollinger Band period of 8. The higher equals smoother ATR, restrictive for signals for wild candles, and then more reactive. This is where we're starting. All right, perfect. So let's go ahead and run our back test now. Let me just check the steps taken. So these are all the steps taken for us to be able to create our strategy. All right, beautiful. We talked about the Bollinger Bands. And then step 2 was the grid. Step 3 was the entry logic. All right, bet. Let me just keep going. I feel like I'm stretching this. All right, let me run the back test now. We're running our back test, and we're running our back test on 2024. And this is the first time we're running the back test. And we're running it on SPY to see how well it's going to do. So I'm curious. I'm very interested to see how this is going to work. And if y'all do have any questions while we're working on this, you can go ahead and let me know. Gritty life. And the back test is it should be flying through, because I noticed I had to make it a bit faster, because I was doing it by myself. Like, I wouldn't mind waiting like maybe 10-15 minutes, but I was able to make it a lot faster. But it's just loading data. Again, it's loading 10 million data points for SPY. We're running it on 2024, right? So we just have to wait for the data to load. Once the data loads, then it flies. Then we're Gucci. Data. All right, so just give it a minute, maybe a second. I appreciate your patience as the data is loading. If there are any questions, I can take them now as I wait for this data to load. As we wait for the data to load. That's crazy. This is taking a long ass time. I want to give it like another minute, maybe 90 seconds. Because I know the data could take a while for it to load. I know it can. I just didn't think it'd take this long. I did not think it could take this long. All right, what I'm going to do, because I want to be more conscious of, okay, here we, what the heck? Back test complete. So there's no signals? All right. This is crazy. So the back test ran, there was no signals? Is that what you're telling me? We ran the back test, but looks like no signals. We didn't get any feedback at all. Review, is that the case? So the back test was running. Good catch. Let me investigate why we got 0 trades. I see the issue. Let me add debugging to understand what's happening. The problem could be the bias is returning neutral. No signals being detected. No valid options found when they occur. I see the issue. The problem is that the get market bias is comparing the date time to the daytime combined, but the open, high, low, close volume may have a different format. Let me add debugging to find the exact issue. All right, let me let that go. All right, beautiful. I thank you for trying, but I'll go ahead and drive the boat. Let me drive the boat. All right, so let's try this again. So let's see what the particular issue could be, though. Oh, what was I going to say? I want to be more cautious of the time that we're spending. So, okay, here we go. No options found for call at SPY 472. So it's having an issue finding call contracts or option contracts, just period. What I'm going to do is just go ahead and do that. I'm going to copy you. Let's come back here. Please don't. Okay. And the reason I'm doing this is because sometimes when you just paste it in, it like freezes. And I don't want to do that. Read using grep and awk. This is the output. Let's find out and fix. It is just 71 files. So you can read that. No options found. The signals are being detected, but the select back option is returning none. The problem is that the timestamp matching. The issue is that blah, 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 blah. Let me add debugging to find the closest timestamp and fix it. This is a lot of debugging, fam. And this is what happens with code. Sometimes things, looking at the debugging output again, the problem might be simpler. Let me check the penny for you. I see penny for you uses write, calls input, but our code we're using. Oh, something so simple, bruh. Something so simple. We're using, instead of using the full calls and puts, we're using C and P. And that's what's causing an issue. Holy cow. Let's see. It could be something so simple that could throw a file off. Let's see. Let's see. Let's see how we go. All right, here we go. We're actually running. Our backtest is running. Yeah, this is the part where it gets difficult. So the backtest ran, but it's in like blow up territory. It's at $20 right now. All right, this is what we're going to do. I'm going to copy. I'm going to paste. Oh, shit. Are you going to paste? Nope. Did I copy it, though? Copy, paste. Beautiful. Let me copy. Come back here. Let me X you out. Read. Before discussing, we want to update the backtest that if I do have a backtest that has an example of this. I just don't remember which one. And that's the problem with having multiple. Maybe it's this one. Save. Okay. I think maybe it's this one. We want to update the backtest if we interrupt it or stop it early. It saves all the trades and we can properly review it. I think this backtest does it. Review. Then advise if correct. If so, proceed to update. Then let's talk about the results so far. Well, all right. I think it's that one. I can see uses the global trades and the catch. Okay, perfect. To say partial results. That's what I'm talking about. So what's that one? And this would make a lot more. So what I wanted to do is I wanted to add a feature is that if I interrupt the backtest early, I'm able to still see the trades and I don't have to copy everything. I thought it was added, but it wasn't. Now it's going to add it already. And then we're going to talk about what happened with our backtest here. I mean, the highest that I seen it go, I think it was like 112. or whatever it is. It did take a couple of trades, so the signals are generating. We just have to make it. We just have to talk about what's happening. Is it good or is it bad? And I don't know. We'll see once we review it, but I think it could be the strategy that is could use a bit more improvement. Okay, here we go. $100. We got to 18. Breakdown time stops, mix P&L, stop losses, all our losses. 5 trades are hitting TP2. Too many stop losses. ATR based stop is getting hit too frequently. No TP1 hits, never reached in 3 minutes. Time stops, some winners, some losers at the 3-minute mark. Losing streak, 7 consecutive losses wiped us out. As the stop too, okay, maybe too aggressive. Maybe let's go to 1. BP settings too aggressive. Okay. Let's go to 1. Hold on. Let me think about this. Let's go to 0.88 ATR. And then where's the Bollinger Bands at right now? Let's go see. Where's the and this is part of the process. This is optimization, and I'm only going to do 1 or 2 of these because I want to keep this under 2 hours. And then I'm going to do part 2 tomorrow. Oh, it's at 0.75. So let's do 1. Let's go to 1. Or do I want to keep it? No, let me just keep it there. Let me do one thing at a time. Let's go to ATR 0.88 and the SL. Is that 10 or 12? What is the stop loss? Hold on. Let's find our stop loss. Stop, bro. Stop. Stop loss is at 10. Let's go to 12. All right, let's go to 12. And then SL of 12. Keep everything else the same. All right, let's go ahead and update these. All right, let's see how this works for us now. Now I'm going to copy. Now I'm going to run it. Let's see how well this works. All right, let's see. Maybe. We're still stop lossing. Not yet. Not yet. We are still stop lossing. This 12 consecutive losses is kind of hurting us. All right, so let's look at how a backtest metrics would look, right? So we ended at $24. We started at 100. Sharp ratio is negative right now. What the Sharp ratio tells us is the return per unit of risk. If it's negative, it's bad. Serotina ratio is negative. Calamar ratio is kind of pathetic right now. Max drawdown is letting us know that it's starting at $100, but then the strategy lost $77 at some point. Total trades, we took 26 trades. Out of the 26 trades, we had a win rate. Where is it? It didn't usually tells me. Oh, wait. Where's the win rate? All right, I'm going to come to that. We only won 26%, and then we lost 73% of the trades. Average win was $6. Average loss was, that's crazy. That's super tight. Profit factor is laughable, 0.37. Yep, it is negative right now. Top 5 winners were all puts. So the puts are working for us. Top 5 losers, we have a bit of a mix between the puts and the calls. So the calls, 2 trades. Okay. and the days of the week. So we're looking at Monday being the best day. Tuesday is horrible. And then Wednesday, Thursday, Friday, monthly breakdown. We couldn't even get out of January. All right, so let's go ahead and have Claude Code review. Oh, we still have, I'm going to do maybe 1 or 2 more review, and then let's fix, let's determine what the possible issues can, fixes / adjustments can be that the data is telling us. You know, it's so funny when you're looking for something and it's right in front of you. Oh, this is a start. I appreciate you, Shing Many, and I'm sorry if I pronounced that wrong. Shinigami, Shinigami. I feel like that's so wrong. I'm just going to stop. I'm sorry. Our win rate is horrible. Consecutive losses. The bias filter isn't working for calls. When it says bulls, we're wrong 83% of the time. The puts are performing better. Water stops didn't help. Still getting stopped out. The signal itself may be the problem. The BB reclaimed might be triggering too early. Okay. This is what I'm going to do because I feel like you're just bitching up right now. All right, let's look at this and let's put our brains on. Okay, what if I'm still doing 1 trade per day? More reactive, catches more signals faster, but more. Okay. What if I did 5, but I required 1.0, right? So what is this letting me know? If we go, let me just widen this out. So I'm going to period 5. So what is that is? I'm lowering it, so it's going to be more reactive, catches faster signals, but also could be noise. Shinigami is Japanese for anime I used to watch. Oh, that's what's up. That's what's up. Again, welcome. I really do appreciate you. And sometimes I stream at night, sometimes, but my night could be your morning, and depending where you are in the world. So I'm trying to get more of a consistent schedule. If I'm not here, I'm on Twitch, but I am starting to stream a lot more on YouTube because I'm loving the feedback that I'm getting here. So we are lowering the periods, but I'm making the standard deviation a lot more restrictive. What if I use, no, I'm going to keep it EMA right now. And then grid level, I'm going to keep it at 3. No, I know this is good. So if I go higher, more breathing room, but bigger losses. If I go lower, then very tight, might get stopped out. So let me do 1.2. Higher, smoother, less restrictive to signal wild candles. So let me go 10 here. And then let me keep everything else the same. Yep, let me keep everything else the same. And let's see what this does. Oh, if that's a anime, I could go try to find it and figure out the correct pronunciation, which I'm going to do. All right, so I just updated a few things, and let's see what that does. I'm probably going to stop and have this be our last optimization because I don't want to push it past 2 hours, right? Because normally I could go like 5 hours, but I don't want to push it. Okay, here we go. Maybe, but then it like. So like it had steam, but then it just faltered. Okay, that's what's up. I appreciate you. I will definitely go check it out. I really don't watch anime, but just to know how to pronounce the name, I will. But I really don't watch anime like that, but I will. I forgot how to pronounce your name. Okay. The account was blown. So let's review. I really think, okay. Let's come back over here. I'm going to try one more thing. Let me just try something radical real quick before, and this is going to be the last thing. I know I said the last thing was the last thing, but this is the last thing. I'm going to try SMA. Where I'm at. What's the SMA period? I kept it at 8, right? Yeah, BB, SMA. All right. Beautiful, beautiful, beautiful. All right, let's try this. Oh, that's funny. What is it about? Review. Matter of fact, because it's not going to know what I did, so that's kind of a moot point. Do you still watch anime now? All right, let's see how well this performs. And I also want to turn on. Oh, they play at 7:30. Damn, I'm an hour late. I thought it was 8:30. I think it's survivor. Let me shut up. Hold on. Damn. All right. I found this is like kind of better. All right, I'm interested now. Um, but it's like kind of worse too. So the SMA may be it. I'm not gonna hold you. Let me figure out something. But how do I change the period for SMA? Like you're not telling me that. That's the Bollinger Band period. But let me make the Bollinger Band period 8, or let's make it 12. Nah, shit. Let me go to. Let's go to 10. Let's go to 10. Let's break it in the middle. Where's the SMA? Where's the moving average period? That's what I'm trying to see. Okay. True. Delta selection. No, I'm not touching anything there. I'm trying to find the moving average period. Let me give you 3.5. I'll do 12. Full close, slippage. They both are based on, okay, reference from the human world, very good. Production series, check it out. Okay, I definitely will. I appreciate it. Look, like you gave me 2 little great recommendations today. Where is the moving average period in the back test, and what is it currently set to? If I can find it. Okay. The moving average period is the BB period is the same value used for both. Does it make sense to use the same period for BB and the MA? Is that custom? I kind of want the Spurs to win. Yes, it's standard customary to use the same periods for both. However, you can decouple them if you want. Faster EMA plus slower DTE. Quicker center line, smoother bands. Most traders keep them the same, but if you want to experiment, I can separate. Okay, let's do this. Separate them, but also have a toggle where we could keep it the same. Said this game was supposed to start at maybe it was I just caught the beginning of this game. I'm talking about the Spurs and the Knicks game. Kind of want the Spurs to win for the NBA Cup. There's just some bullshit in-season tournament that just started. All right. View same period. Now let me up to date. All right, so as soon as this updates, I'm going to go back. I'm going to adjust one more thing. I'm going to run one more test, and then we're just going to call it a day. We had the strategy. Now we're at the optimization part, right, of said strategy. It does have some legs, right? If I didn't see any legs, I kind of would have threw it away. But it does have some legs. We just need to adjust and tune a couple of things. All right, here we go. MA period. All right, beautiful. Now I have ideas. All right. Where is it? Where is it? Where is it? It should be right here. Use the same. False. MA period. Let's use the moving average of 5. I'm going to keep let me move you to 8. I'm going to keep it SMA. I'm going to keep the grid. All right. Do I want to change anything else? No. Nope. Oh, ATR. No, I kept that the same. All right, bet. All right, this is going to be the last back test that I'm going to run because, again, I want to be mindful of y'all's time. I don't want to make these videos super, super long, but this is a great introductory for our grid strategy. I am going to be streaming live part 2 of said video, maybe tomorrow. So let's see how this works. I don't know. I like what I have. All right. Yep. We need to spend more time on this, and I'm going to. This is where we're going to stop right here. This is going to be a great stopping point for everybody that has just joined us. Welcome to the fam. You are going to be getting a lot of great content here, not just on being able to algo trade. Eventually, I don't know how soon. I don't know if, but maybe I may try out Forex, right? But I don't know. Maybe. Right now, our focus on being able to trade options. We are going to be creating a lot more AI agents and machine learning here. If you haven't already, I need you to go ahead and like and subscribe. This is part 1 of our video. We will be dropping part 2 soon. I don't want this to be a bit too strong or a bit too long. So our part 2 is going to be focused on optimization and being able to get our strategy up and running. So we created the strategy, right? Now we just need to optimize it such that it performs a bit better than what it's doing right now. If y'all do have any questions, please make sure you reach out. It is your boy Creative. We'll be back at it again for another episode. All right, I'm going to try Shinai Gami. I may have done that wrong, but I appreciate you. Also, Subhash, I appreciate you for stopping by as well, and everybody that just joined us. I thank you for joining the channel. If you do have any questions, please let me know. It is your boy Creative.